All right, good morning, ladies and gentlemen. Thank you for joining us for our webinar on open banking in Hong Kong today. And special thanks to our panelists for generously sparing their time to be with us, and also F5 Networks for sponsoring this webinar as well. Now, HKMA was one of the first few regulators in Asia to develop an open banking policy. Now that we've completed the first two phases of HKMA's four-phase open banking framework, we've invited a panel of experts to discuss the lessons learned and to explore what's next for open banking in Hong Kong. Today, we're joined by Chung, who is the General Manager and Division Head for China Construction Bank Asia. And above Johnny is Brit, who is the Executive Director for Innovations and Ecosystems for the Consumer Banking Group in DBS Bank. Quite a mouthful, Brit. And then after that, we have Clive Chan, who is the Manager for Solutions Engineering for Hong Kong and Macau at F5 Networks. And last but not least, we have Marc Entwistle right on top there, who is the Principal for Oliver Wyman Digital. Welcome to the show. Thanks for joining us, everybody. So let's begin by kind of taking a step back and looking at the broad view of where open banking is. I'd like to invite the panelists to give us a sense of the state of open banking in Hong Kong right now and how it actually compares to other markets. Maybe we can start with Marc on top there. Marc, why don't you share your views with us? You have the floor, Marc.
Sure. Okay. Thanks for that. So I guess our attendees may be somewhat mixed in terms of their understanding. So I'll start with very high level. So open banking is not really a new concept, and in fact it's fairly global and increasingly global. But it's worth noting that different jurisdictions, different markets around the world have fairly different understandings of what open banking is. I think when a lot of people think of open banking, they think of open banking as defined in Europe and particularly in the UK. So in Europe now, several years back, I think around 2018, we saw the launch of PSD2, which is the second Payment Services Directive, of which part of that was encouraging banks to open up access to their data, and at a very basic level, banks have an enormous amount of data on their customers, kind of where they're spending, potentially years and years of spending patterns, geographic locations, knowing maybe what utility services they provide, what restaurants they're spending their money at, and so on and so on. But there's a bit of a gap then in the analytics that's being provided on top of that data that's available, and then the value that's translated back to the customer. So on one hand, there's an opportunity for third parties to be able to take some of that data, do something interesting with it, and provide new value add services to customers. There's also, as we start to think about that, the opportunity to provide more ownership back to customers of their data if they're able to access and manipulate that data directly, and then think about which third parties they would be okay with having access to that. And then finally, in terms of just some of the drivers of why different markets might think about doing this, it's important to recognize as well from a European perspective, where much of this started, that this was partly in response to the global financial crisis, and thinking about how do we empower third parties who are not necessarily some of the banks that have been struggling, and thinking about how do we provide some of those alternative providers the ability to dispense loans and so on the level playing field with some of the banks. And so that's been going full pace, particularly in the UK, which really coined the term open banking. And we've now seen that to other markets, Singapore, Hong Kong, Brazil, Australia, many others. So maybe I'll stop there, give others an opportunity to maybe talk about some of phases 1 through 4 in Hong Kong.
Sure. Thank you, Marc. Now let's have Clive to share his view on the state of open banking in Hong Kong and how it compares to other markets. Clive, you have the floor.
Yeah, thank you. So I'm Clive from F5 Networks. Actually, we have a partnership with an organization called Brit. They did research on the maturity or kind of open banking landscape across the globe. So we found that Hong Kong is in the kind of a champion quadrant. They're saying that UK, Singapore, all those regions, they are in the champion region. Why? Because of the regulatory body organized in Hong Kong MA. They put a phased approach to encourage banks to do the open banking. Like what you said, UK, they also have some body to promote the concept. Singapore, the Singapore Monetary Organization also do a very fluent, guideline for how to open the API. So I think in this kind of sense that those regions like Hong Kong, we are in the champion, or we are leader in doing this kind of thing. But also there are some challenges. I was saying that like in UK, in Singapore, they have very I was saying guideline concrete how to do the API. But in Hong Kong, we are now finish the phase 1 and phase 2 and think of the phase 3 and phase 4. And in terms of the the guidelines, things is a very high level. So it detailed to the bank to how to do the open banking, how to share the data with the third party. I think a lot of banks they're thinking of how to do it properly with the compliance. There's some challenges, and also in terms of the fintech or third party, how they do enjoy the ecosystem. And in terms of business, I was saying that a lot of banks also thinking of what's the B case, what business case, what the use cases, where the data they could share, and what the benefit to work with the fintech company. I think finish the phase 1 and phase 2 is okay, but look into the phase 3 and phase 4. Reference to UK, Singapore, but in Hong Kong, you need kind of landscape. I was saying that also in China, there are a lot of big fintech, big name that they may also interested in doing the market in Hong Kong. So I think there's some challenges, but there's some opportunity. But in terms of the maturity, I was saying that we're good that with the government, they help with the CDI, with all the financial infrastructure that promote these things. Yeah.
I think CDI and the phase 3 and phase 4 is definitely something that we want to explore a little bit more in the later parts of this webinar as well. But you're certainly right in pointing out that markets like Hong Kong and Singapore are often more advanced in terms of their regulatory policies, which is why today we have a number of friends joining us from Malaysia, Philippines, and all the other Asian markets to kind of understand what Hong Kong is doing and see how it applies to their own markets as well. Yeah. Now, I'd like to quickly jump to Brit. To get her viewpoints on the state of open banking from the viewpoint of one of the market participants. Brit, you have the floor. Feel free to share your views.
Sure. Thanks for having me. So I feel that Hong Kong is definitely making a lot of good progress. I think phase 1 and phase 2, as we've said, I think it's going to get really interesting in phase 3. Phase 1 and phase 2, there wasn't too much from a banking perspective that we could really do with those. It's more kind of product and service information, which you could get from other sources as well. So, but I think in phase 3 and phase 4, it's definitely going to get really interesting. And I do want to dig in more into the CDI. And I think I do definitely applaud Hong Kong in terms of its approach. It's very collaborative, so that we're all working, all the banks and fintechs and others are working with the HKB and really helping to advise on the standards and really what makes sense for Hong Kong and what's really going to help move the needle in Hong Kong and help move us forward. So I do think it's a very, very collaborative approach. I think there's some definitely lessons learned we can take from some of the other markets, like Australia, for example. It's very reciprocal in how they're kind of doing it, so that banks can provide data, but then you can also request data as well from the TSPs. And I think that's now kind of what we're contemplating with this CDI. So I do think, I think we've got a long way to go. I think we're still in the early stages, but I think we're really laying the groundwork well for the next decade, I'd say, in terms of kind of this open banking and a very kind of a collaborative approach, not only on the consumer side, but now the focus of phase 3 and 4 is actually turning more toward SMEs. And so I think that's really going to help the small businesses in Hong Kong who really need it right now, being able to get more access to loans and things like that. So I'll stop there. I think, we'll talk about all this further, but I think it's a very smart approach. And I think it's great to support the SMEs in this way and make it easier for us to collaborate with those small businesses.
Thanks, Brit. And I think there's no time more crucial than this for SMEs to be able to access loans in a time of economic and health crisis right now. Now let's move on over to Johnny to get his views on the state of open banking in Hong Kong right now. Johnny, you have the floor.
Medium-sized bank in Hong Kong, I think we're very excited to an open banking initiative from Hong Kong MA. So we do not treat it as a regulatory or compliance project. I think since from the start of the phase one, we really want to see how can really, to transform customer experience and have to offer some new services in different channel. So that's something we really want to, but of course, from as we mentioned as compared to other country or other region, so the state of the open banking, although we are in maybe the champion quadrant, I think, but Hong Kong still maybe the speed or the velocity to really open up the data or open up have more is still maybe still have room to catch up, I guess, as compared to UK and other countries, that we are seeing some really innovative product or solution like a kind of aggregation that can be changing the consumer perspective on what their data can be used, what the data can be really help them to manage their portfolio and so on. So I think that definitely, we are very looking forward to have more opportunities to collaborate with other fintech companies, even with other banks, to really to share the data, so that the consumer and the part of consumer or even SME to do more in the open banking landscape.
Thank you, Johnny. So let's move on to the next question. And I think maybe before we move on, just for the audience group in who's tuning in right now, who may not be so familiar with the regulatory landscape in Hong Kong, maybe Marc, you can just quickly share with us like what are the phases, and as we move on to phase 3 and phase 4, what can we expect from the market? Marc, you have the floor.
Sure, thank you. So as I think we've mentioned, there were 4 phases defined at the outset of open banking or open APIs for the banking sector in Hong Kong, and the first 2 of those were providing access to primarily to product data, and so essentially a lot of the same type of information that banks might already be providing publicly, either directly on websites or through other content that they might provide, perhaps on PDFs that are available or would typically be emailing out and so on. And so that step 1 was really taking information that was already existing in certain forms that historically some third parties, such as price comparison websites, might have been attempting to screen scrape or to have provided through file updates, and turning that into an open API mechanism, so that becomes more reliable, more secure, real time, and so on. And then secondly, the next evolution of that was providing product origination. So that's new customers being able to come into the bank from third parties. And so price comparison website is another nice example for that, where, for example, as an end consumer, you might potentially start your product search, whether it be for a credit card or a time deposit or something online. Think about which is the most attractive, potentially find that laid out online, and then click through from there. And so that's a kind of a referral fee model, which again then becomes facilitated over open APIs. So the idea was to have two early phases, which were taking relatively low risk in terms of processes that already existed, no dramatic business model changes, but just applying a technology lens on top of that. And then secondly, in terms of ease of implementation, actually the timelines were relatively aggressive, and that was one of the interesting aspects of the Hong Kong MA approach, in that it wanted to move pretty fast and then treat those 2 first phases as a learning mechanism. We've now had quite a long gap before the introduction of phase 3, and one of the big reasons is to take some of those learnings that Brit touched on and then think about how we bake those into phases 3 and 4. So phases 3 and 4 are much higher complexity, higher risk, in that now we start to have access to customer data, so customer data being provided to third parties, and then actual transaction history as well. And so we've, I guess we could go into what we've seen out of phase 1 and 2. And my quick takeaway on that would be, I think we've had successes in that generally banks have got there in some shape or form. Some of the bigger banks have been able to do that by themselves. Some of the smaller banks have been able to benefit from third parties such as Jetco, which is the consortium behind the ATM network in Hong Kong, being able to provide that as an intermediary service. But I think it's fair to say that it hasn't all been smooth sailing. One of the potential downsides of moving fast was lack of data standardization. So not too many standards defined on how banks should be going about providing that data, and indeed what types of data you might even expect as a third party when you try and access some of those APIs. So we've done well in terms of getting some of that basic infrastructure in place, and now there's a big step towards actually providing that as a quality service that third parties will be able to use and want to use and build products and services around, and at the same time make that attractive for the banks themselves, which I'm sure we'll get into.
For sure, and I think you correctly pointed out that the third and fourth phase is probably a lot more complex than the first and second phase, which is why it's going to be a bit more of a gap in terms of the implementation. A report from S&P Global also described that the biggest challenge for banks moving forward into the next phase is actually security, and Clive being from a security background, I think maybe you can touch a little bit on the security challenges, what banks can do, and what are some lessons we learned from phase 1 and phase 2, particularly in a post-SolarWinds world where data and privacy concern is a huge problem for all of us, right? Clive, you have the floor.
Yeah, definitely. I think in Hong Kong, we take a, I must mention that we take a very balanced approach, a very safe approach to gradually open up the data. And a lot of banks in Hong Kong also, they also, traditionally bank, they don't do that with third party. They think that the data is the most valuable part, or the customer information they don't want to share. They just use it as their own. So once we talk about working with TSP, working with other third party, how to do the authentication, authorization, how to have the right up control of all those, open up data. This is a real challenge. And a lot of banks in phase 1 and phase 2, they know the requirement for Hong Kong MA, how to protect the internet banking or the traditional channel. Right now they have to open up a new channel. I think that part will probably they have to from the lesson they learned from the phase 1 and phase 2, how to harden the network, how to open up the API properly. But now in phase 3 and phase 4, I was saying there are a lot of authentication, authorization is a challenge for them to do the who can access the API, who can access the data. And that's why also there's a very valuable information for the bank. So when we talk with Hong Kong MA, they also want to know from the bank perspective, what's is it they ready to do this? So I think that's why we take longer times for Hong Kong to open up all those critical data. So in terms of the technology, I think that we also have a lot of new technology coming up, blockchain, open API, gRPC, a lot of stuff, mobile app, a lot of new things the bank also have to adopt. So in terms of security, I think there's a big challenge, but I think in the market there's also a lot of vendors that are helping, like F5. We definitely help on some of the areas that like how to protect the API. That Marc mentioned, that a lot of ecosystem partner in Hong Kong also have experience to open up and protect the data. So that's why I think there's areas that bank they have to look into, and how they can securely deliver all the customer information, or how to open up some of the valuable data is crucial for them to see how to do. That's my thought. Yeah.
Thank you, Clive. Now let's move on to Brit, and I kind of wanted to get from Brit's viewpoint as well. What DBS has been doing in phase 1, phase 2. How are you guys viewing phase 3, phase 4, and how are you going to move forward? And what are some of the lessons learned? Brit, you have the floor. Feel free to share your thoughts.
Yeah, sure. I think as we discussed and as we all kind of agreed is that in phase 1 and 2, I think it was more about kind of readying the FI sector for open banking. So it was more about kind of leveling the playing field a little bit, making sure everyone had kind of that certain level of digital readiness to be able to create these APIs and to sort of work in this kind of new world of open banking. So for us, I think there really wasn't too much in terms of phase 1 and 2. We have worked with a few TSPs like mReferral, for example, like as Marc mentioned, more of a comparison site for mortgages. So I think that's definitely been a success. And then I would say we've gone beyond because I'm actually not a banker by background. I'm come from more of a technical background myself, working in internet and media space. And that's why DBS sort of hires people like me, is to look at kind of this new world of open banking. And what attracted me to DBS is that we are a very, very digital bank. And that we have a slew of APIs that are already available and that we're using. So, for example, we have a really successful rewards redemption API that we've rolled out with Hong Kong Taxi and recently with Klook as well, where people customers can offset their rewards points for a taxi ride or for buying kind of a movie ticket, or when the cinemas are open again, or a coffee, and Klook, things like that. So I think this is something that we've seen a lot of success with. And if I look back, I think originally this was probably slated for phase 4. Although now, as we said, phase 4 is going to be, phase 3 and 4 will be focused more on the SMEs, not direct to consumer. So we have many, many APIs that we have created. That said, with every partner, we are very careful about choosing our partners very carefully, first and foremost. And we do have many partners soliciting, coming to us and applying to use our APIs for phase 1 and 2, and then for other API integrations as well. But we do choose them very carefully, and we do review every single one, even in phase 1 and 2, where I know, as Marc mentioned, with the Jetco platform, that TSPs could actually sort of in a more automated fashion link up with the banks for those APIs. We decided not to take that route because we want to ensure that with every single partner that we're reviewing kind of their security levels. I know Jetco did do a lot of that vetting, so that was sort of done at a platform level, which is nice. But for us, we do have that capacity, and we wanted to take that focus that we're doing it on a one-to-one. So that, of course, will definitely be our way forward when we're looking at phase 3 and 4, even more so, because all of these TSPs that we're going to be working with are going to have to come under some real scrutiny in ensuring that their cybersecurity standards are up to our standards. So I think that's the most important thing.
Thank you, Brit. And I think as we look forward to phase 3 and phase 4, like you said, I think we're also looking forward to things like cinemas being opened up again.
That's right.
Let's move on. Yeah, let's move on to Johnny. Johnny, why don't you tell us a little bit more about the phase 1, phase 2, and what you guys are looking forward to in phase 3 and phase 4 in the China Construction Bank Asia. Go ahead, Johnny. You have the floor.
Yeah, similar to what Brit has mentioned, we also onboard quite a number of TSP, to work with our bank, for phase 1 and phase 2. In particular, for phase 2, it's more about acquisition of new customers. So we did open some new channel with, for example, with our co-brand card partner like Octopus. So in their app, the app of their user, they can apply the credit card from our co-brand card with CCPA, so that the user can just using the app of Octopus app, and then to going through that to apply a credit card through CCPA. So this is something that we have done some innovation, some kind of also quite stringent security requirement as well. But of course, we would have like M referral also doing mortgage, pricing comparison. This is also most of bank. We are doing quite for business respond. They are doing quite well because the lead coming from those kind of TSP is quite sometimes very significant. So that will help us to generate more business opportunity. Yeah. So I think definitely we are looking forward to go further, to the core part of the open banking with the phase 3 and phase 4. That's something that really we are very excited to look forward to move into that region as well.
That's when things really start to get exciting, right? Phase 3 and phase 4. Now, I think a lot of the panelists also kind of quickly mentioned earlier in some of their sharing is that phase 3, phase 4, there's going to be a bit of a shift to SMEs. We're going to look at the new introduction of the CDI. So I kind of want to have the panelists to talk a little bit about that. But before that, I just want to remind the audience to feel free to ask questions at any point of time. If we're able, we'll try to take as many as we can as we go along. So let's hand the session over to Marc. Marc, maybe you can share a little bit more with us about the CDI, the shift to SME, what it is all about.
Sure. Yeah, I think CDI is super interesting. So it's for those that don't know, so CDI stands for Commercial Data Interchange. And on a basic level, it's really flipping the open banking concept around. So when most people think of open banking, they think of, as I described during the introduction, encouraging or sometimes often mandating banks to open up access to all of that customer data and other data types so that third parties can benefit. I think we've seen that work in some markets and not so well in others. And that's, as I said, because the drivers are so very different in terms of why open banking may or may not be useful. And one thing that is critical when asking banks to invest so much in building out all of this infrastructure is knowing that there's going to be a reasonable level of adoption at the end, and that there's going to be some kind of return on investment, right? And one of the key problems that we really see in all markets is actually how do banks monetize this at the end of the day, and how do we justify this investment? So CDI, I think, is actually a brilliant strategy because it's now thinking about how do we get data out of SMEs, so small businesses, and share that back to the banks. So in this case, it's actually the banks primarily benefiting from receiving additional data, but it's additional data which translates much more easily into a business case. So once banks have that data, they're able to gain a much clearer, much more personalized understanding of those SMEs, and then be able to, in the first instance, be able to then credit score them on a much more individual basis and provide loans as and when they need them with a much clearer understanding of their risk profile and so on. So it's kind of flipped that data exchange around, and ultimately kind of takes us more towards I think the Australian model that Brit mentioned, which is a two-way data interchange, and potentially also scope, at least as it's currently defined in Hong Kong, to ultimately be able to extend into other sectors as well, which is something that Australia has is quite bullish on. And even in the UK, we've seen open banking now being extended to open finance, which is also taking open banking beyond retail banking and into wealth products, insurance products, and others. So I think it's really taking us in a direction which is much more easy to understand the business case for, and understand how we're going to be able to start monetizing. So credit scoring and loans make sense as a first instance, but there's no reason that can't be then extended to other interesting use cases, which could include digital ID, for example, which is another hot topic in Hong Kong. Now that we have the IM Smart initiative rolling out as well, and which is bringing access to electronic ID, which is kind of a big topic, but converges into other programs, which is maybe being able to provide unique customer identification into Greater Bay Area, which again is then very, very attractive for a market which is 7 million people in Hong Kong, potentially then being able to access Greater Bay as well, it hugely increases the size of addressable markets. So it's I think I'll let others expand on that, but I think it's really taking a view that we do need to move towards a model which is easier to understand the commercial benefits, and thinking about how we ramp up adoption a little bit faster.
Yeah, I think, the I am smart digital ID is definitely something that's fascinating. I mean, it's kind of the bedrock to a lot of various initiatives that cuts across, right? So let's move on to Clive. Clive, what are your views on the CDI and the recent introduction of it?
Yeah, I agree with what Marc said, that in the phase 1 and phase 2, a lot of banks, they have a challenge of investing a lot of infrastructure to do other things. But in the end, maybe in Hong Kong, we don't have a standardization of the approach. But once the government, they lead some project like CDI, it's a common infrastructure, financial infrastructure that for the bank or for the SME to share the data. And with the iSmart, all the infrastructure that I do believe the bank, they have the lower the cost for them to do the business. I was saying that because in the beginning, when we discussed with the bank, they maybe a very large bank, they can invest a lot doing the developer portal, doing all the EKYC, auditing the TSP. But for SME or for fintech partner, they can't invest a lot on the innovation. But with the government, they have the infrastructure. I think and all the infrastructure, we have a very crucial part. There's the data and the identity to do the business transaction, to do data, the digital thing that help the banks or even fintech to easily to participate in the ecosystem. And then in the end, they can find the innovative use case. So I think in the end, we have the infrastructure ready. Once the infrastructure ready, we can leverage them to do a lot of innovation, product innovation use cases like credit referencing, lower the cost for the SME to apply the loan. I think in the end, we have to find a way to doing business more easily, in terms of the cost, in terms of the efficiency. With the infrastructure, I think in a good direction that the bank or fintech partner, they can leverage, take around that. So lovely, we'll see the progress. Maybe second half, we have all this infrastructure ready, how to participate in the ecosystem, tap into and then finding use cases. Interesting, I was saying that. Yeah. But having said that, on those credit referencing or CDI or the technology may be new to the bank, so blockchain based, or they leverage some new API that definitely the bank also have to ready for that. I was saying that in terms of security, in terms of how to leverage all the infrastructure we have. Yeah.
All right, thank you, Clive. Now, we do have some interesting questions coming in from the audience, but let's wrap up our discussion on CDI and then we can move on to some audience questions. Now, Brit, from DBS viewpoint, what are your thoughts on CDI and its long-term impact on the sector?
Well, it's actually a perfectly timed for us, I'd say, because we actually just last month we launched our own SME Digibank. So I definitely encourage everyone to check it out. So it's a fully digital bank for SMEs where they can onboard digitally without having to go to a branch and all of that. And I know, that can be a huge pain point for small businesses where, sometimes you have to go back and forth to the bank 5-6 times to open a bank account. And then it could take, several weeks. And, the SMEs just don't have the time for that. They want to focus on their business. So we're really proud of what we've built here, and we're going to be developing on this. And with CDI, it's going to be able to really help us kind of use those two hand in hand so that we can better serve our SME customers. And then when you layer on top, AI and machine learning, like we work with companies, for example, like Data Robot, which really helps us with our risk assessment models and being able to get more insights and determine our risk level and hopefully, supporting those SMEs better and being able to give them larger credit lines than we might have been able to otherwise. And also giving a faster turnaround for them in terms of loans and things like that. It's really, I think it's a great thing for the industry. So for us, it's something that we're definitely very excited about it. It's great that I think all these are things are converging at the same time. So it's going to be an interesting year.
Sometimes the universe just aligns, right?
Yeah.
Let's move on to Johnny. And Johnny, what is your view on CDI and its long-term impact towards the industry? Johnny? Johnny, I think you're muted. Oh, we lost Johnny. Seems like the key phrase for 2021 and 2020 is you're muted and we've lost this person. Let's move on. We'll go back to Johnny once he's able to join us. Now, I think a lot of the panelists earlier also talked a bit about monetization, which kind of gels up with one of the questions that the audience have over here. Keiichiro is asking, I guess monetization is a lot tied to how do we actually justify to the naysayers within the organization in terms of moving forward with some of these things, right? So maybe we can go back to Marc to kind of talk about how to convince that group of people on the ROI, and then now that Johnny is back, then we can go back to Johnny and get his views shortly after we get Marc's view on the ROI. Marc, what is your view on this question from one of our audience?
Sure, it's a good question, and it's not an easy question. I think it does very much depend on which part of the organization you're accountable of.
Sorry, Marc, your connection seems to be a little bit weak right now, so it's kind of hard to hear you. Maybe we'll get back to you. Maybe you might want to try to refresh. Meanwhile, let's go back to Johnny, who's returned. So, Johnny, tell us about your views on CDI and its long-term impact. And sorry, Marc, maybe you might want to refresh your browser. Go ahead, Johnny, you have the floor.
Yeah, I think first of all, I want to talk about the shift, from the open banking, phase 3 to phase 4 to more SME focus, because I think that is something that we a bit surprised to us, because I think in the first phase 1 and phase 2 will focus quite a lot on some consumer banking or credit card related use cases. So that's why our business department, they are very engaged to looking forward to the phase 3 and phase 4. They can do more, to open up more data to share with TSP. But in fact, at the end of the day, the consulting paper is more focused on the shift to SME first. That's make a bit surprise. Although we are also actively looking into CDI to see how we can really leverage this kind of platform to engage our SME partners to see how they can really get more instant loan without any security asset. That's something very helpful to the market, given that such a difficult economy now. But I think in terms of the overall the shift, to I think it's more about the data privacy, maybe some other issue so that maybe the regulatory body, they are more prudent to wait and see to see how the SME side do better before they can really open up to the personal side. That's something that to us is a bit surprise, so that we need to change our strategy a little bit to make sure that we are the business division that they are been very excited before, to how we can really move forward with some other use cases. Yeah.
Thank you. Let's go back to Marc, and hopefully his connection's a little bit more stable now. Marc, back to the earlier question about how to convince them, the ROI, the monetization. Go ahead and share your views.
Well, I was just trying to think of an easy way to answer this. I don't think it's a simple question, and I think that's why a lot of banks the backside of the
I'm sorry, Marc. We're still struggling with your connection, actually. Maybe we'll move on to Brit first while you look into that issue. All right. Brit, I'm sure you've had some experiences dealing with naysayers in DBS. So how do you convince them, the ROI, the monetization? Go ahead. You have the floor.
Oh, I get the tough question.
Marc deliberately slowed his connection so he doesn't have to answer it.
you owe me a beer for that one. No, I mean, I really think it's a matter of just kind of baby steps and trying by doing. You can't boil the ocean, and you can't just all of a sudden transform your business overnight. So I think it's got to be gradual, and I think it's got to be kind of a one-to-one. Like one of them, one of the initiatives that my team runs actually is something called Startup Exchange. So I don't want to go on too much of a tangent, but a way that we work and trying to kind of introduce new technologies and new ways of thinking into the bank is by running proof of concepts. And so I think we've found a lot of success with that. And we initially worked with a corporate accelerator called Nest, who was great, about 3 years ago. And they really, well, we started working with them about 5 years ago. So we actually had the first corporate accelerator in Hong Kong. And then when I joined the bank, I took a look at sort of where we were in our evolution. And I felt that we had graduated from that model a little bit, so that we were at a point where we did have enough kind of innovation sort of ambassadors in the bank that we were ready to take this on and do this ourselves. And so I think, you know, if you set yourself up in the right way and the company up in the right way, where you encourage people to innovate, and of course, the most important thing, or second most important thing I say, is that you need to have funding, of course, as well. So, you know, we set aside a pool of funds just for these innovation initiatives, so that any business or even a support unit in the bank, and that's where I mentioned, like with RMG, for example, with Data Robot, they came to us and they said, look, we really want to use AI for our business. You know, and we worked with them to source the right, Data Robot's a bit of a more mature company, but, you know, we work with all kind of different levels of companies, from more early stage to later stage companies. So I think that's probably, I would say that's much better than just trying to convince them. You know, if you can actually show results, and you do it in a way where it's, you can get results in a short period of time as well. Because another thing that I saw when I joined was that some of our proof of concepts were going for like a year, you know, and they could even take 6 months to get off the ground. And startups and fintechs don't have that kind of time. You know, we see a bank and a fintech sees time in two very different ways. So, you know, you've got to be able to work in a way where you can onboard them quickly. You can kind of get the assessment done quickly, the know your partner, all of that done quickly, and then work with them. And then that way, you know, you train up more and more people in the bank, and you have these kind of ambassadors who really understand digital and know how to operate in this new world. And they've done, and they know how because they actually did it themselves, you know, sort of with our guidance. So that would be my advice, is to really, if on both sides, you know, for the FIs and for the fintechs as well, is to get involved in some of these programs. But you do want to make sure, I would say, I don't want to be too critical, but I've seen some companies that have these accelerators, and we don't even call it an accelerator because I feel it's much more of an exchange. So ours is called Startup Exchange. But some of them are more just sort of for marketing purposes, I'd say, you know, and maybe you get some learnings out of them. But you really got to get people in there, get their hands dirty, roll up their sleeves, and working hand in hand with these companies. And then I think that's how you'll see a change within your financial institution.
Thank you, Brit. And I think, you know, there's some solid points brought up there. I think banks and startups view time very differently. 1 year for a bank is reasonable. 1 year for a fintech startup, that could be the entire runway, right? So they might go bust by the time you approve the thing. So those are some things to consider. Clive, from a security viewpoint, I'm sure, you know, you've seen some of your clients being resistant to implementing some of these things from a security concern viewpoint. So how have you seen your clients allay some of these concerns internally?
Yeah, I think in terms of, you know, once the client have the, you know, the sponsor from the business, I think that could be easier for us as a, you know, we are doing infrastructure, networking, security, you know, maybe some more advanced fraud case kind of thing. But at least Brit said that we have a solid unit business case, and maybe we start it as a, you know, kind of a experimental or incubation program inside the bank, have a champion for them. And then at the consumption of the technology right now, we could offer more than before. Traditional bank, they love to maybe buy something on premises, but we have cloud, we have many services on the market, and the cloud, you know, a lot of vendor, they also have the partnership with vendor like us to provide more, you know, advanced security function. I think at that kind of a consumption model, they can help the bank, you know, at the initial stage, they can have, you know, a proper sizing or scale kind of solution they could have. So I do believe that they could help on bank to you know, adopt some of the protection on the new project, rather than they traditionally they go approval and they go there to the IT and then they purchase the boss, and then in the end it's a 6 month or 9 month project that no one will do it that way, new way of doing business. So definitely I think the new consumption model and a lot of the technology also very mature. Like the FI, we have to do some fraud kind of detection, bot mitigation thing that the cloud native, or you can consume many services. I think that can help. Yeah.
Thank you, Clive. Marc, hopefully your connection's better now. And Brit says you owe her a beer. Go ahead, Marc, you have the floor.
That wasn't at all strategic, but it should have been.
We believe you.
So
Go ahead.
I was just going to add on, like, another way that I think interesting to think about the reason for investing in is if you look at both Starling in the UK have been in the news quite a bit. But there's a lot.
I'm sorry, Marc. We're still struggling to hear you. I guess the internet's just not on your side today. But what I'm gathering is you saying that using Starling Bank, who's one of the digital banks in UK as an example, and they are one of the only ones, or at least the first one, to be profitable. And one of the ways they've done so is through using open banking, working with third parties. Maybe we'll try to get back to you. Maybe later you can try turning off your video so that it doesn't consume so much bandwidth. At least we'll be able to hear you. But in the meantime, let's move on to Johnny. And Johnny, can you share with us like your experience in dealing with naysayers, dealing with stakeholders that remains unconvinced within your bank?
Oh yeah, of course. I think the to get a business sponsor on open API is first we educate them what is open API, open banking, and of course you get phase 1 and phase 2 seems to be more easy, couple of new customer, new channel. But about phase 3 and phase 4 is a bit challenging because some people okay, we can share data to other party, right? What are the benefits we are getting? What is the are we charging those API, or what do we get in return? I think that's something that we do need to try a lot to convince the business. What is what kind of as a data provider, as a data consumer. So what is your give and take? When you are going to participate this kind of initiative. So I think definitely we are going rounds and rounds of like open banking internal committee or some kind of forum to make sure that we can get the business, because you had to get a sponsor first before you can get business case. Yeah. Otherwise you can really not really get into the ROI thing yet. So I think that's something that we need to really to engage with the different business and then to explain to them what is the model in the overseas in other jurisdiction. So what kind of challenges, what kind of potential benefit they can get. So that's why we are doing at least some of the division that are quite engaged. That's why we are doing quite well with them to start with some new product, some new innovative initiative. But of course, moving along is still a journey for us to get the buy-in, and also to from a bank, it's always the data is ours. How we can really share with other people. That's something that we need to change their mind. That's something that we need to work harder on that as well.
Okay, cool. Moving along, we have a question for Brit and Johnny over here. Stanley is asking, how do you see open data, social media contribute to phase 3 of credit scoring? So while you're still on the highlight, maybe Johnny, you can take that, and then we can move back to Brit. What are your thoughts on this, John?
Yeah, I think this talking about alternative data to do the credit score. I think definitely we have been talking about a lot. How can really, besides as a person, what besides your income statement, what else we can really trust you to give you some credit. So I think that's something that we've been exploring a lot. But unlike other maybe in other jurisdictions like China or whatever. They're doing very good on based on social media data. Like for example, like that WeBank, they can basically based on your social media, your network, to see how is the credit, some credit scoring. Also the Sesame credit score from Alipay or Alibaba, they're also similar kind of model. Yeah. But I think in Hong Kong we are still quite restricted to use alternate data. Of course we can do some, but I think there's still some privacy issue whether the third party or the person himself can share the data with us, and also how can really based on this data to do some meaningful credit scoring. So we are exploring some like as CDI where definitely we can get some POS data, get some other data, whatever. But for personal data, we are still exploring more close with some third party that we are working very close, so that like our co-brand partner, like say Autoplus, whatever, so that we can see how can really leveraging some other data that with, of course, with the consent of the customer to do some kind of more instant credit scoring data. But beyond to extending to social media, we are still trying.
Thank you, Johnny. And Brit, do you have anything to add to that question?
Yeah, I would agree with Johnny that we're, of course, very careful about how we would consider using any sort of, social media kind of related data, especially on the consumer side. I think, you have to tread very, very carefully there. And we see the data, even the data that we have in-house, we don't see it as our data. We're really just kind of sort of the protectors of that data, but it's the consumer's data and it's the SME's data, so we have to be very, very careful about how we use their data. But I think on the SME side, there are definitely some more interesting things that we can do there where you don't get so much into privacy concerns. Like, for example, in Taiwan, we have a partnership with a company called PC Home, where we actually use suppliers' data in that within the PC Home platform, with their consent, of course, to actually then provide them personal loans based on their small business and how their small business is doing and on their sales and on the revenue numbers, et cetera. So that one is going extremely well. And I think that's an example where you can really use alternative data to the benefit of your customers. But yeah, as we said, I think we're just very careful about how we'd explore anything like that on the consumer side.
Sure. Just very quickly, I think Stanley just added that he's more focused towards the usage of this alternative data on SME. So maybe you can quickly touch on that and then we'll move on to the next question. Brit, go ahead.
I'm sorry, what was the question exactly?
So the earlier question, Stanley is mentioning that, it's actually really looking at how alternate data could contribute towards, for the SME sector rather than the consumer sector. That's what he was gearing at.
Yeah, sure. And I think there it's very interesting. Just like the Amazon model, for example, where they basically take their suppliers' data over the last couple of years, and then they anticipate kind of their borrowing needs in terms of purchasing for their own small business. And then they offer them a loan instantly. And they say, we anticipate you're going to need $1 million in the next 6 months. Here's the loan, take it or leave it. These are the terms, kind of non-negotiable. But here it is, and we know this is sort of the threshold that you need, and so suppliers can on the spot accept that loan. So I think that's sort of the way things are moving, and I think that's where it's very timely. It's the sort of the right size at the right time, and you can get that money to the SMEs quickly. So I think those kind of models, I think, is what we're moving towards and what makes a lot of sense.
Thank you, Brit. Now, let's move back over to Marc, and hopefully his connection's okay now. Marc, do you want to maybe share your views again on the whole monetization and ROI?
I'll give it one last go.
It's perfect now. Go ahead.
So I won't cover anything that I said even partially already, but I think one other interesting aspect to consider that we haven't talked about too much is the arrival of virtual banks in Hong Kong.
Mm-hmm. Yeah.
So I've mentioned very briefly Starling in the UK. The virtual banks setup here is in Hong Kong is somewhat different, but interestingly, the rise of virtual banks that we're seeing across the region, such as kind of Singapore, Malaysia, Philippines, and elsewhere, is actually quite similar in that they tend to be consortium based, so large backers and a mix of very different skill sets all coming together. And so interestingly, I think there are kind of ecosystems being created at the core of these new virtual banks, where those virtual banks are thinking about how do they leverage the inherent strengths of their parent companies, and think about how do they use that to maybe migrate some of the existing customers that they have. How can they share data between those different firms? And as with all of this, how can they do that safely, securely, legally, and so on and so on. But ultimately, I think that's very much the direction in which the industry is going, and that will happen. That will certainly happen even more as we see further integration into Greater Bay Area. And so, to some extent, I think what we're facilitating with the introduction of open banking is really inevitable. And at the same time, there's now perhaps a competitive element that didn't exist there before, where I think that the easiest examples to provide is always the big tech firms from mainland China. And so that's the likes of WeChat and Ant Financial and others that we know have very successfully leveraged data sharing across a range of different companies, and being able to use that to develop very highly personalized understanding of the customers, and then being able to cross-sell a whole range of different products within financial services and outside of financial services. And so in a sense, I think regulatory considerations aside, that's really the dream in a way of what we're facilitating through open banking, which is being able to gain a complete view of customers across every aspect of their life, not purely within the context of what they do within banking. And so these firms and these new digital banks will have a natural platform on which to build those kind of offerings, and all the standard advantages of building on new technology, not having legacy in the way, and so on. So I think when we think about the need for open banking, it's the need to maintain relevance as much as anything else, and that kind of transformation is not simple, and it is a multi-year, very complex transformation, both in terms of at the front end, just brokering those partnerships, understanding how you would think about kind of cross-leveraging the different customer bases, whether it's directly acquiring and engaging customers, or whether it's simply being able to provide a differentiated customer experience. Ultimately, I think we're just seeing banking move towards a model which is very different to what we've experienced until now, certainly within Hong Kong, which has been very traditional until quite recently. So I think in the near term, it totally makes sense that we're now going down a more SME focused route, because it removes a lot of the complexity and concerns around handling end consumer data. But ultimately, this will be built out sooner or later, whether it's through regulatory facilitation or just competitive dynamics, and will probably pretty rapidly come back to the consumers. So hopefully that helps just add an additional angle. And I think as we make the business case for open banking, it's not just a technology conversation, it's not just a short-term business model consideration, but it is definitely at the heart of corporate strategy.
Yep, thank you for that, Marc, and we're glad to finally have you back. I think you raised some important points about virtual banks, and in particular, Southeast Asia, nearly every regulator we're keeping track of is already in the progress or have already introduced some form of regulation. So certainly a very relevant conversation. Now, we are unfortunately running short on time. So I'd like to invite the panelists to maybe offer a closing thought and perhaps their outlook on where open banking and even open finance is going in general, like including use cases like what you guys have mentioned about wealth, insurance, and whatnot. Clive, why don't we start with you? Clive, you have the floor.
Okay, thank you. So I think we talk a lot about, the potential, the opportunity coming up. In terms of, we are a technology vendor. I think definitely the bank have to invest on technology. How to, as I said before, how to, making business more, effective, lower the cost to, we talk about SME, personal loan, that kind of transaction, that not a big number. How to leverage technology like blockchain, AI, to, make the transaction or the cost of the transaction lower. At the same time, leverage new technology like cloud or even, some of the solution to help to protect all the, we talk about a lot of data changes, authentication, authorization, who are you, and then that kind of areas also bank that usually they're not doing that investment a lot. They direct engage with the customer usually. So that's why they also have to, see how to evolve, how to build a muscle, how to build a platform to enable them to grab the opportunity that they're coming up. Yeah.
Thank you, Clive. Let's move on over to Johnny to share his closing thoughts and his outlook. Johnny, you have the floor.
Yeah, I think our bank is very open, and also we believe the open banking thread is a game-changing kind of initiative for us to move to the next level, and also internal or externally, we work very hard to convince different stakeholders to build on the open banking to develop their business model and new service offering. External also need to work very hard with other TSP and Fintech company to see how we can really create some very engaging experience for our customer, also the corporate as well. So definitely we're moving in full force. Of course based on according to the regulatory standard, so that how we can really do better and also securely and also generate more business benefit for our customer and also our company as well. Thank you.
Thanks, Johnny. Now let's move on over to Brit. Brit, what are your closing thoughts and your outlook on this?
Yes, thanks so much for having me today. And I would just echo what all my fellow panelists have already said. I think that we are at the early stages of this. I think we've got a lot to learn, and so it's smart. We've got to keep our eye on what other markets are doing, and that's why I think panels like this are so important, so that we can share across countries and across regions and really take the best practices from all these different markets, because it is a lot of test and learn. But at the end of the day, we are all looking out for our customers, both on the commercial side and on the retail side, and really want their best interests at hand, and making sure that we can serve them in the best way possible for them, because it's really about helping them kind of achieve their goals, for business and personal. So but it's really exciting. So I'm just very happy to be involved in it, and I think there's so much more to do here in Hong Kong. So we're right in the middle of it. So it's going to be a really interesting year for open banking.
Vincent, you're on mute.
Oh, now I have fallen victim to the whole mute thing. No one is immune. Anyways, Marc, what is your closing thought and outlook on this?
So I think just to come back to that ecosystems point, I'm a huge believer in that ecosystems are the future of banking, and that banking will be part of a much wider collection of data sharing and injecting financial services into people's lives wherever they are. And so, as we've said, we are at an early stage. I do think that CDI is a quite clever way in Hong Kong that is fairly unique to Hong Kong to be able to boost adoption, boost learnings, and so on. But I think it's interesting as well that it should be able to provide a model for banks to be able to have, how do we kind of help us help you type conversations. And actually, if we think about that type of model, then that enables banks to actually go out to any type of organization and have that same type of conversation. And then so now we start to think about B2B2C banking. And I think that's what we're going to see a lot more of in the future. And some of the first movers around that are prepared to put in that investment, I think will scale pretty quickly and be well positioned, whether it's an incumbent or some of the new players that we're seeing in Hong Kong.
Thank you, Marc. Now, with that, it only leaves me the pleasure and honor of thanking all of you for joining us and the panelists for sharing their views and the time with us.